Welcome to another video where we showcase how to trade with value. In this video, we will explain how to define some areas of interest for entry opportunities and where you should be looking to book some profit. The concept of value is very crucial in trading. Our job every day as day traders is looking to find where the value for the market is. The fairest price is where the market participants, in this case buyers and sellers, agree on these prices to conduct business. If we define where value is, then we can trade around that value and discover opportunities. A very key concept of trading with value is understanding that the markets we trade are no different to an auction to sell a painting, for example. The market is auctioned up and down to find sellers and buyers all the time. This is what the markets do. We auction up until there are no more buyers, or said otherwise, to shut off buying, and we auction down until there are no more sellers. Now let's visualize this with an example. Let's say one stock is trading higher, okay, we are on an uptrend, so on a higher time frame, so we get this uptrend and then you get consolidation phases, okay, so this phase right here is balance. This is where the market finds fair price, okay, so you get this range bound activity, okay, so you get continuation, you break from that balance and you find continuation higher, and then you form these nice ranges, okay, then you move higher and eventually the market will get no more buyers and find some key rejection. Where are you going to look for a potential destination target? These are the destination targets, okay, so the market will return back inside those fair price. This is where market found value and buyers and sellers agree on these prices, and you will get these nice consolidation phases, okay, so you will move lower and you will find again this will be some potential support for the market. Maybe we bounce off of it, okay, because if you find acceptance inside these ranges, the odds favor that you will at least retest the opposite side. Okay, so this is an example of the auction, and that the market is always seeking these ranges. So to define these value areas and where value is building up, okay, you need to look at the value areas, and this is why we often say don't exclusively look at price, but look at where value is shifting, okay, so if value is moving higher, meaning that the most participants are conducting trading inside this area, the odds favor that if you get outside this area and you are in a balance day, in this case a range bound activity, once you pull out of this area, the odds favor that you will return back inside. This is how we are looking on a normal day. This is a normal day distribution. We are looking to fade the highs right here. Okay, so we are expecting that the market will try to break, but will not find any meaningful continuation. In this case, you can see here the volume per tick is much lower than inside the value area. And you will look for it to take the trade back inside the value, which is what happened basically both down here and up here. So what exactly is the strategy when it comes to trading with value? Our strategy is basically to look for potential entry opportunities at low volume nodes and take the trade to book profits towards the high volume nodes. In simple terms, this is trading from rejection into acceptance, then back towards rejection. So we are basically looking to buy and sell above the high volume nodes, okay, so when it comes to the high volume nodes, the bulk of the activity of this session in this example occurred right here. You can see here the high volume nodes as well. We're looking for opportunities above here if we are expecting that the range bound activity for this market is going to continue inside this balance range, okay, and we are looking to fade the move towards a low volume node and find acceptance back inside, and then look at the opposite direction as well for opportunities back inside value. So what can change the perception of value? a change of value will be breaking and holding below or above a low volume node. In this case, if you have your pivot right here and you get the market breaking above and holding, this means that a lot of volume will be transacted here, both on the volume profile and time spent in the market. This is a sign that the potential change of value has occurred and a possible continuation is underway. So we are not looking to just fade this. Once you get upside and you get increase in volume as the upside continues, then it's the odds favor continuation. Okay. Now, there's a big difference between trading with value when it comes to a trend day versus a balance day. Okay, so you are not looking to fade the trend. If you are getting very high volume on the way to the upside, the odds are good that you will get nice continuation. Okay, so just by looking at this example right here, you can see how the market on this trend day is moving higher and you get this bulk of the activity. Okay, so you get this nice consolidation phase. Okay, so as the market continues higher, look where the K period low was. Okay, so it was on this value right here. We explain this on the auction diagram that we made an example of, and you can see here how the market returns towards this value right here and then finds continuation. This was also a low volume node. Okay, this H period had no transaction above right here, and it bounced off of this low volume node. This is an example of the trend day. On a trend day, basically we are looking to define areas of low volume nodes for pullbacks above or below value in order to find an entry continuation point. Now on a balanced day, you get the opposite. You are looking at low volume node highs in order to take the trade back into balance. If higher prices do not attract more buying, in this case, as you make higher highs, you don't get enough volume in these areas, the odds are good that the market will return back inside. This happened in example here, the F period. You can see here the volume was not in existence and the market was moving higher. Guess where the market returned back into? Okay, back inside the value. And of course, you had before the G period, for example, has even had time to happen, you get this bulk of activity here. Okay, so the market simply returned back inside, tested the lows right here, and again returned back to acceptance. So this is acceptance of price. Okay, high volume nodes are magnet of prices, and low volume nodes act as rejection of the market. Okay, so for example, how do you get expectation? A balance versus trend day. Okay, for example, if our expectation of the day is range bound, with the market lacking any catalyst to move the market, we can look at the extremes of the range to find opportunities and take them back inside value in this case. Then you get, for example, CPI news or FOMC. Okay, you get the rates. The odds favor that it's not going to be a simple balance day of small consolidation range. You are likely going to get range extension. Okay, so you are likely going to get a big spike. Same with some mega caps earnings. Same deal. You will get a trend day, usually following up the earnings if they are good or bad. Right? That's some of the ways we can expect the following up day what it's going to be like. And of course, we are looking to trade at low volume nodes and take the trades back inside high volume nodes. Now let's look at a realistic example taking this trend day, which will have confused a lot of people when it comes to trading with value. Let's just begin by dragging a volume profile at the start of the session right here. As you can see, right here we had a nice range bound activity. The most volume was transacted here. This is the point of control. And, let's move on and see how the market has, made higher highs and the volume started to build up. But, as we approach, let's say here, this candlestick right here, you can see this cluster formation right here. Again, this volume profile starts ends here. In this case, this whole thing couldn't have happened, but we have some clues here that this is a low volume node, okay, and the market starts to build value above this cluster here, okay. So this is breaking the low volume node and finding acceptance above, and the market starts to conduct business. So where would we look for opportunities? Okay, so this whole thing couldn't have happened, and just by looking at this automatically, this low volume node, okay, this is an area of interest for us in order to find opportunities. Okay, so let's continue and see how it's going to look like as the session moves on. As you can see here, the market keeps building value, and you can see how the market keeps returning towards this low volume node and doesn't get accepted back inside this cluster. It gets rejections. So you had 2 entry opportunities right here just by looking at the low volume node. And that means that buyers were building their positions here. The sellers were getting absorbed basically by passive buyers, and you get a nice continuation. And you can see here the value keep shifting to the upside. Now you see the bulk of the activity happening here. The POC also shifted right here. You can see a lot of activity happening, and you get a nice continuation, higher highs, okay? So again, you see here this massive consolidation range that we were talking about. You always get these consolidations, where to look for opportunities. You will look at this highs right here, okay? So where low volume was transacted, same deal. You get this low volume node, this highs right here. Guess where the market bounced off of, right? Then, the session ends right here, and you can see even the overnight respected this level. For example, if we drag a box from this low volume nodes, okay, you can see how the overnight actually respected this level throughout, okay? So you get follow-up continuation at these low volume nodes, okay? So just by looking at this, volume profile, again, we are looking at the high volume nodes for profit taking, okay? So, and you are looking at the rejection prices at the low volume nodes for entry opportunities. So if you want access to this exact Sierra suite that you are using every single day in order to perform market analysis using order flow and market profiling, be sure to check our website. We have advanced footprints, advanced market profiling, and of course a 70-page ebook course that you can take that explains an introduction of market profiles, order flow, and market auction. We also have a set of bonus items for one price fee. Thanks for watching.